Hello everyone, and welcome to this presentation of the Trade of the Week. Now in this week's presentation we're going to be speaking about the indication of a trend change, part 2. Welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading, and we are first and foremost an educational site where we try to educate all of our students and members with all of the strategies and techniques I've accumulated in my 37 years so that you can ultimately empower your own trading. Now, we presented this webinar roughly about 2 weeks ago, and so this is part 2. We're going to follow up on our indication of a trend change. But before we begin, as always, we ask that you please take a moment to view our disclaimer. I'm going to show you some simulated performance results using our idea of a trend change and our specific tools to capture a trend change. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's presentation of the Trade of the Week. Now also I'd like to invite each and every one of you to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. It's at SPCLSTTRADG. We post a lot of great free information on a daily basis, anything from daily financial wisdom to actual signals that we're currently in. So feel free to follow us on Twitter. Okay, so we're talking about the indication of a trend change. Remember, we started this presentation roughly 2 weeks ago where we wanted to tell you that we had spotted a trend change. Now, how do we do that? How do we do that exactly with our tools and techniques? Well, we use probably our most popular tool for capturing trend. That's the PET-D. Now, what is the PET-D? Well, it's a proprietary algorithm. I was introduced to this on the floor of the stock exchange when I worked there some 35 years ago. But when I first started using this, we didn't have the use of high-speed computers, or we didn't have any programs available, so we could only apply this to daily bars. Now it's an algorithm that we can use with intraday bars, daily bars, weekly bars to capture the trend in any one of these different time frames. So it's a trend identifier, and the beauty of this is you can really use it in any time frame and in any direction. So how do we apply this and how do we use this? Well, it's a color bar tool. So what we've done is we've colored the bars. In an uptrend, they should be colored green, and in a downtrend, they're going to be colored red. All right, so let's look at a daily chart of the S&P index. Now, we presented this to you 2 weeks ago, and this is just your standard daily chart, open, high, low, close chart, without the PET-D applied. So there's really no indication of any trend, but when we presented this webinar 2 weeks ago, we applied the PET-D, and we noticed that we were starting to have an influx of red bars. Coming into this, you can't see this on the actual chart right here, but most of the bars, the majority of the bars were green, as you see in the upper left-hand corner. Then we started to sell off, and we had 2 red bars, followed by 1 green, but then we had this scenario right here, okay? This is what we talked about 2 weeks ago, the week ending Friday the 3rd. And what we told all of our viewers, and plus all of our members saw this, who are members of our PET-D course, is that 3 consecutive red bars signals a trend change. Conversely, if we had 3 consecutive green bars following this, well, it would constitute a trend change to the upside. But since this was the first time in some while where we saw 3 red bars, we alerted all of our students, all of our members, and you as well in our Trade of the Week presentations that most likely a trend change was going to be underway. So the following week, we see here that we actually did start to go lower. Not that much, but this doesn't appear to be a lot, but it actually was anywhere from 150 to 250 points to the downside in the following week. So we continued to remain with a negative bias. And then this day happened, as you can see here. We had a really strong up day. In fact, I believe we were close to 300 points to the upside. Now, a lot of people look at this as some type of short-term bottom. As you see here, we had a bottom made here and another bottom made here. So people were even calling this some type of a double bottom. When in fact, CNN Money came out and they said the stock market has the best day of 2014. Now, this was on October 8th after the close. It says Wall Street nightmares about the Federal Reserve just got a little less scary. In fact, it looked downright dreamy in the stock market on Wednesday. The Dow surged 275 points, the best performance of the entire year, after a new report suggested the Fed isn't ready to lift interest rates off the floor just yet. So everyone perceived this as really good news. The market rallied 275 points. Everyone thought the worst was over, but we, being savvy traders, know that the PET D remained red. Remember, we need 3 consecutive bars of a different color in order to tell us that the trend has changed. And look what happened. While everyone was thinking the worst was over, the market continued to go lower and lower. So we were well alerted to this. In fact, many of our members use this as a way to get short in the market. In fact, the market fell close to 1,000 points since we first warned everyone of this 3 consecutive red bar change here. Okay, so then we came down, I believe, to the 15th where the market really went straight down, but seemed to have some type of reversal. It was still a negative day, but at the end of the day, the LA Times came out with breaking news saying the Dow Jones closes down sharply after a rocky day. The industrial average closed down more than 170 points after a wild ride today, but it recovered most of its losses for the day. In fact, we were down as low as 460 points after news of a weak retail sales and other negative economic reports. We always find it so interesting that everyone always has a reason why it was down so poorly, but no one told us of this advanced news 3 weeks in advance. We knew this prior coming in when the PET D told us everything, that the market had signaled the indication of a trend change. So as we see here, a lot of people were thinking this was some type of bottom, and since that has happened, the market has actually tried to bounce. In fact, we've bounced a couple of hundred points in the Dow as of yet, and so people are starting to think once again the worst is over. Now this is today's action, Friday the 17th. During the day, NBC News even came out saying Dow soars 300 to break 6-day losing streak. So investors have made up their minds for now. Corporate earnings are more important than the handful of Ebola cases in the U.S. So the Dow seems to have broken some type of losing streak. Everyone is thinking, well, perhaps now the worst is over. We've really fallen out of bed. Maybe it's time to jump back in the pool. If we look at the chart once more, we ask ourselves, what are the color of the bars? We have seen no green bars since we gave you this early warning here at the end of September. So therefore, all the students and members at Specialist Trading know that we are not looking to get long until we get 3 consecutive green bars. Until then, we are looking for shorting opportunities. Now, we have here, even though I can't divulge what it is, right here, this is actually the setup to one of our best strategies to go short, strategy number 7. Remember, until we see bars turning to green, where we have consecutive green bars, we will continue to stick with this rule. 3 consecutive red bars signal a trend change. Now, the beauty of the PET D is that we showed you some daily bars and how it works, but you can also apply it to long term. Here's a monthly chart of the S&P index once again, with all the peaks and valleys going back some 20 years. Once we apply the PET D, we see how well it worked in this time frame as well. But you can also apply it to short term. If we go back to just Wednesday of this week, the 15th, we see here that we opened the day down lower and we had 3 consecutive red bars. And look what happened after that. This was in the first 15 or 25 minutes trading day, and then we had 3 consecutive green bars. And look at the rally that ensued after that. So whether you're a long-term investor, whether you're a swing trader or an intraday trader, the PET D is a fantastic tool to have. The beauty of this is that it gets you on the right side of the market. Now, for more information on becoming a member of the PET D course and acquiring PET D, you can contact us at our sister site. That's Pro Trader Strategies, where they market and promote all of my courses and all of my tips and techniques and strategies. Or you can contact any one of their trading consultants by emailing them at trading@protraderstrategies.com. Or if you're interested in the PET D or any other of my strategies, you can call them directly at area code 310-598-6677. This concludes our presentation of the trade of the week. In closing, I ask that you take one last look to view our disclaimer. We gave you a lot of information in this presentation, but please remember that we can in no way guarantee that any of the results we shared with you will be repeated in the future. Thanks so much for attending and watching this video. We hope to see you right here next week with another trade of the week. Bye-bye.